Hey. How we all doing? Hey, hey, hey. What's up, Bandit? What's up, Pam? What's up, Eddie? Glad 3 people are tuning in. Oh, there's 4. What's up, Tate? What's up, Greg? What's up, Rich? Hola, Brian. Kyle. Storm. Oh, you mean the CPI? You got me worried for a second. It's been the first 2 days here above freezing, like all winter. It's beautiful out right now. 45, 47 degrees here in Idaho. All right, let's jump in. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's the position disclosure. I got out of S into the close. I got out of Roku into the close. I added on small Shopify and small Microsoft. Yeah, sorry about this morning. I was very frustrated. My internet just dropped as I was doing my morning research process. I don't remember what time. Maybe 7 probably 40 or so Eastern. And I couldn't get it back up. I was on the phone with these people. And I have access to a hotspot, and I couldn't get the hotspot to connect to the computer either. And then eventually at like 9:02, the hotspot just connected. And then at like 9:32. It was right at like 2 minutes after the market opened, right as I was starting to freak out. And then like probably 11 o'clock Eastern is when the actual internet came back on. But everything's running super, super smooth right now. So all is well. But it's always frustrating when you don't get to do your typical kind of morning research process. So didn't get to do my full morning research process. Big shout out to Pat for just jumping in last minute to help me out. But what I probably would have said is day before CPI day, the market has been pretty bullish recently. We should expect lower volume, chop, and rest, most likely, maybe even a little bit of corrective action if people are fearful into the CPI. But at the same time, the market technicals in the big picture are bullish. So today is probably a day to do a little bit less again. But our market technicals certainly are bullish. Forget about the 5-minute chart for a minute. Let's just take a look at the daily. So how did we close today? SPYs are exactly flat. Qs are down 0.6%, and the IWM is up 0.8%. So once again, second day in a row, a real big rotation here. IWM relative strength and Q relative weakness as the thesis that we had for this market, which was mean reversion with the IWM catching up to the Qs as opposed to what we've seen for most of 2022, which would have been the opposite, a weak IWM pulling down the Qs, pulling down the SPYs. We had a thought process coming out of the SVB situation that the opposite could actually occur here. And it's been a slow grind, but you look at the Qs actually had 2 inside days in a row, so a real tightening pattern. That's actually, this is exactly what I wanted. This is exactly what I was talking about like a couple weeks ago. If we can get the Qs to more or less move sideways and then have the IWM catch up a little bit through price, I think that's your most bullish situation. Obviously, the Russell's got a lot of work to do. We talked in yesterday's afternoon meeting that 178 and 180 are big resistance levels. So no surprise, today's high in the IWM is 177.97. But overall, again, 2 days in a row here of pretty solid mean reversion with the IWM catching up and the Qs being weak. And the weakness was very particular, I think, to mega cap tech. Most of these tech stocks were really not good, the big ones. Apple down 0.75%, Amazon down 2.25%, pretty ruthless for a day where the SPYs are flat. Microsoft down over 2%, also ruthless for a day where the market itself is flat. Google's off a percentage point. So It's actually really impressive to look at the SPYs flat when you're looking at a lot of those mega cap tech stocks, which are a pretty decent percentage of the S&P and a massive percentage of the Qs, down this much. For the SPYs to still be flat, it says something. But obviously that's because there was rotation. And you can see that rotation when you look at the IWM, which is up 0.8%. You can see that rotation when you look at XLF, which despite that little sell-off into the close, up 0.9% on the day. XLE, up 1.1% on the day. So it's exactly what we're looking for, right? XLF above 32, making new kind of recent highs here, starting to get into what is almost a gap. Technically it's not a gap. We obviously traded down off of the SVB crisis from basically straight down from 36 to 32.50, but it's similar to a gap in the way that there's not going to be a lot of price memory here, because the market's traded straight down. Like if you look at a price like 31.50 or 32, which was resistance, there's a lot of price memory. Where does price memory come from? Price congestion. What is price congestion? It's when a stock trades back and forth, or in this case an ETF, trades back and through a price over and over and over again. If people have traded a stock or an ETF at a price in the past, they have a higher tendency to trade that stock or ETF at that price again in the future. So you look at the XLF, looking really productive. If you can start really clearing above this 21 EMA, clearing above this 32, 35 area, you don't really have any price congestion because there's just a straight down sell-off. So financials really good relative strength. Bank of America gave some follow through. This is one that I've been sticking with. JP Morgan was a little bit weaker, unfortunately, because that's one that I'm in as well. Energy, for people who caught that trade yesterday when we were calling that out, or even a few days ago when we were calling it out. Energy given a decent little follow through today. You got Oxy, a little bit of a gain on that one. Chevron up a little bit. Apache with a second really strong day. So we got a little bit further follow through in our relative strength. The interesting part about today, I thought, was the strength in growth. And I guess at the end of the day, how did ARC close? ARC's usually the first thing I just kind of type up if I want to see growth broadly. But growth here, represented by ARC, closed up 0.7%. So interesting to see that growth tech was actually able to be positive today, while mega cap tech is down, as represented by the Qs, is down 0.6%. So I thought that was actually the most interesting part of today's trading session. This is just a pure rotation day. The safety plays of the banking crisis, which, again, we correctly called that out immediately on that Monday, that people would rotate into Apple because Apple's got more cash than most countries. Saw some money come out of it a little bit. Saw some money come out of some of these big tech stocks. And if you look at, there's some interesting breadth numbers over the course of the last month. I saw a statistic that, I don't remember what the S&P was up over the course of the month in March on a percentage basis, but from a breadth perspective, there was very few companies that traded up as much or more than the market, and they're pretty much all mega cap tech stocks that were really holding everything up. And the IWM, again, probably representative of more of your companies that are actually out there, obviously was very weak for March. So you had a positive March S&P, but only 20% of stocks that performed what the S&P did or above it. And you just saw some of that money come out of it today, and a little bit of a continuation of that rotation. But this is all into the CPI. So I can sit here and I can try to analyze these daily chart technicals. I can talk about how I'm pleased with the rotation that we saw today. But you got to kind of throw your technicals out the window a little bit. I do think that news does tend to move in the direction of the technicals, as a very general rule, but you coming into an event like the CPI, which has created massive movements for the market on some of those numbers. The last one, if you guys remember, was actually very muted. The last CPI that came out for February, when it came out in March, I actually can't even point to which day it is in the chart. So some of these days, if you go back to 2022, it's very obvious which day the CPI day was. October 13th was CPI for September. November 10th was CPI for October. Just massive days on big volume. The last CPI that we had in March, I actually can't even point to which day it was on the chart because it was a really boring kind of day. You got all these jitters going into the CPI because it's a big event, but the number came in perfectly in line, and the market just had like a very choppy day. So we'll see what happens tomorrow. Pat mentioned that the options market is pricing in about a $4 move for the SPYs and a $4 move for the Qs. So, you're looking at, let's just call it a percentage point is what the market's pricing in. So it's interesting to see that even that has died down because the last couple of events, particularly the last one, but the last, I think, 2 CPI events in a row, the range on the day and the volatility was much more muted than what the options market was actually pricing in. And obviously, people are in hindsight, they're seeing what happened on those days I just referenced, the October day, the November day, where the ranges were so massive, the volatility was so massive that, February and March, when we're coming into those same events, the options market's been pricing in huge moves. So it's interesting to see that that's tightened a little bit. So we're expecting, let's call it roughly a percentage point for SPYs and Qs. Qs a little bit more than SPYs, obviously, a little higher beta, makes sense. So we'll see how that plays out. I'm probably going to be doing the strategy that I've been doing with the last, probably 6 CPI events. The last 2, it wasn't nearly as profitable compared to those bigger movements where, what I've been doing is I kind of take that for my swing positions that I'm in and maybe for some new positions, I take what the market's pricing in, which again, let's just call it roughly 1%, add a little bit of a premium onto that, and I place out some very light bids and light offers kind of based off that. I look at the stock I'm looking at, is it a higher beta stock compared to the SPYs and the Qs, in which case I have to price in even more. I tend to be pretty conservative with it. It's not a trade that's appropriate for everyone because the problem with this trade, even though it's been very successful for me over the course of the last 6 months or so that I've been doing it, is that you can't really manage risk, at least not immediately. You can't really have a stop loss in. So everyone needs to assess if it's appropriate or not for them. But for me, for these last bunch of events, I've been doing exactly what I've been doing, and it's been really profitable, particularly like on a couple of the bigger events. I remember the low of last year, which was this CPI day from October 13th. The SPY low is 162.50, but when the number first came, sorry, that's the IWM. The SPY low is 348.11, but I remember getting filled in stocks on bids pre-market that was like closer to SPY 345, and then we ended up closing that day at 367.50, and I was able to make like the SPY equivalent of like $25 in the SPYs in one individual day. It was just like a massive P&L day for me, and then coincidentally that happens to be the low. So I'm going to continue to do that strategy. But you got to assess whether or not it's appropriate for you because, again, if let's say that, on average I've got some bids out in stocks that are like 2% out of the money. If it's a terrible, terrible number, if the market reacts really, really badly, if the options market is very much wrong, which can happen, then, stocks drop 3% immediately and I'm sitting there kind of bag holding without a stop loss in place, waiting for an initial pivot so that I can get a stop in place that's appropriate to the market. So again, the trade's not necessarily right for everybody, and I do it with an appropriate amount of tier size for my own, personal account value and account size and things like that. But, like always, I always do my best to be honest with you guys on what I do, even if it's, not something that is textbook correct or something I would teach to a newer trader or, something that is or isn't appropriate to necessarily everybody on the team. So, yeah, that'll be a CPI tomorrow. It'll be pretty exciting. Again, from a trading perspective, I was really conservative today for a couple of reasons. One, I just wasn't able to do my appropriate morning research, which, these are, it's worth, I guess, even talking about that real briefly. it's really important for all of us as traders to kind of know where our mindset is, to know if you ever have a day where you weren't able to prepare properly, or a day where you're not feeling well, or maybe you're a little hungover, or whatever your situation is where you're just not feeling it. You got to listen to yourself and know that, hey, I don't have as strong of an advantage today as I typically do, so I need to really take a half step back. And I was extremely frustrated. If anybody knows me really well, you know that one thing that puts me on tilt more than anything, more than like literally anything, is technology issues. I start to eventually lose my mind. I'm actually proud of myself. I kept my cool pretty decently this morning. But, just had to recognize, hey, I wasn't able to do my appropriate research process. So that means I shouldn't push things. And then even on top of that, my game plan for today would have been to not really push things. So, because we're right in front of CPI and with where the market is. So I will give myself some credit, actually. I did a great job today. And the great job that I did was not over trading, not pushing setups that I wasn't properly prepared for. I missed a couple things I was upset about. How did that Palantir end up closing? I've been eyeing that Palantir move through that 850 for a while. Yeah, not a great close, but a great initial pop. I'm not sure if anybody caught that, so we had mentioned that one on a few occasions. If it could clear 850, it could be like a trigger entry on that thing. But I wasn't involved, and it's okay. I was able to be positive today. I made a few bucks for myself. It's not massive money or anything like that, but I certainly can't complain on a day when the market didn't do much, and I honestly wasn't properly prepared. So I guess that's my lesson for today. Happy to answer any questions anybody has. Happy to review any names anybody wants to review. So have at it. Robert wants to know how I'm doing. I'm doing really well, Robert. Glad to hear from you, Robert, over on the YouTube channel. The weather here is just finally opened up and is beautiful. But we're having a hydrologic event. I've never heard that term before, actually. I just learned it yesterday, where there's just been so much snow and out of nowhere it got like really warm. So it's just like kind of flooding everywhere. It's pretty crazy. But I'm good. From Rex over here in the VTF, I tried to go long Tesla. I didn't look at Tesla at all today. Wow, look how tight today's candle was. It's one thing that was really notable about today. Low volume, really tight range on SPYs, really tight range on Qs. IWM maybe a little bit better, but also super low volume. Going back over to Tesla, I mean, that's insanely tight. One of the smaller bars here. Maybe the smallest or second smallest daily candle you can see for quite some time on Tesla. Tesla more or less held that 180 the last couple of days. 180 is a level for Tesla that we had spoken about. 2 days ago, I called for a long off Tesla. I guess that was Thursday last week. That worked pretty decent off that 180. Yesterday, I didn't like it as much. I remember yesterday morning it was relatively weak, but I guess it eventually recovered that level with the market strength. But let me actually read your question. I tried to go long Tesla with the inside 5 at 955. Okay. It was relatively strong compared to the market. At 950, the Qs were trying to pivot. Okay. Qs were also relatively weak, and Tesla is a tech stock, though, so let's keep that in mind. So I thought it could go. I know that you mentioned an inside 5 should be taken when we like other stuff. When comparing the market with a single stock, market pivot matter to stock, even if it is relatively strong. If the market continues to trend lower, it's less likely to get follow through on the long side. Yeah, like today, the Qs are trending down in the morning, and the actual pivot comes at 10:15. Do you think I missed anything on the 955 long? In hindsight, we all know that 10:15 long got follow through. But probability-wise, how do you grade the 955 and the 10:15 trade on Tesla? So the first thing I would say about Tesla is I really don't like the spot on the daily chart. So for me, that automatically means I'm not trading it. First and foremost, if I don't like the spot on the daily chart, this goes back to what I was just saying earlier about when I was looking at the XLF, about the concept of price congestion. If I'm looking at an area of big price congestion, I don't want to trade it. I want to trade levels where the stock is going to be breaking down or breaking up or something like that after. So you go into a space where there is more space. Stocks can flow more easily through gaps or through areas where there's less price congestion. You look at the area where you're kind of getting involved in this thing. Let's call it 187.50. You go back to the daily chart. Where's 187.50 on this daily chart? You're almost into these flat-lined, crisscrossed moving averages. You're in the midst of kind of an inflection area at 190. There's just a lot of price congestion, I think, kind of going back and forth through that area, and you're buying right into these moving averages in the midpoint of a range of a trendless stock. So that's the first thing I want to tell you. Based on this daily chart, unless Tesla was specifically in play with news, if Tesla was in play with news that I missed this morning, again, I didn't get my research done, and I'm just not aware of it, then okay, fine, I can trade this 5-minute chart and not really care as much about the price congestion on the daily. But I can immediately tell you the price congestion on the daily automatically. I don't even care what you're talking about with the market, relative strength, relative weakness. I'm not going to be involved. Next is, yes, you've got relative strength in Tesla, but you're fighting the fact that tech is just getting smoked here in the beginning of the day with these cues. So yeah, you got relative strength, but one of the things I like to say is it doesn't matter how relatively strong or how relatively weak your stock is, or let's just say strong. If the market's just going to continue to sell and sell and sell, eventually it's going to take that and roll that name over as well. So I think you're kind of fighting the relative weakness of the cues. You got a really bad spot on the daily chart in Tesla. Sure, you've got some relative strength on your side. It's clear and obvious that Tesla's acting stronger than the market, but it's just not going to be a trade that I'm going to be involved in. Neither of them. 9:55 a.m., 10:15 a.m., neither of them. And I don't love the 10. I mean, I guess you got like a 15-minute pivot that's kind of coming in into the 21 EMA on the 5. It just feels like you're forcing it. So I'm not going to do anything with that. Your next question is on Schwab. I took a swing in Schwab from yesterday. Oh, me too. Schwab was weak at the open. Yes, it was. The daily is open right at the 80 EMA on a downtrend, so after the first 15 minutes, I put my stop right at the low of the first 15-minute candle, and I got stopped. Do you think my stop is too tight? Should I use yesterday's consolidation around 50.60 as my stop? Could you explain more about how you would use the 15-minute low as your swing stop? Would you only take it when the stock gapped 1% away from the close? Sure. So my rule is that if I am committing to keeping something overnight and swinging it, which I did with Schwab, we had a great call yesterday on Schwab through $50. It closed really well. I'm keeping this. Obviously, had a very, very tight day today, but it's still applying pressure on this downward trend line. I think if this downward trend line really begins to clear up, if we get through CPI tomorrow and it's not a disaster, I could be looking at this stock at $54, $56. So my rule is if I'm committing to keeping a position overnight, I am committing to basically trailing it going forward only on the daily chart. So I keep my original stop loss in the trade. My original stop loss in the trade, which for me is yesterday's low. So my stop loss in Schwab is still 49.48. And I will only raise that stop if the daily chart meets my trailing rules. Otherwise, it's not worth the risk of keeping it overnight. You don't know what can happen overnight. News can come out overnight. There's no point to keeping a position overnight and then trying to trail it on like a 5 or 15-minute chart as soon as the market opened, expecting you're going to get perfect continuation from the previous day. The idea here is, so one of the things I really like to talk about is looking for intraday risk for daily chart reward, right? And I think we talked about that in yesterday's afternoon meeting a lot, where I'm starting with my risk on a really small time frame, and I'm looking for reward that can potentially come from a big time frame. And with Schwab here, my risk on that small time frame is like 40 cents or so on my average price, something like that. And once I decide to keep it overnight, I'm looking at, $54 to $56 is a reasonable target one on the daily chart. There is, a potential that, especially for a bank right now, that Schwab comes out with bad news overnight, the depositors are fleeing, who knows? And this thing gaps all the way down on my stop loss tomorrow or even below it. So I'm looking for daily chart reward here. And whereas I don't like to ever take daily chart risk, especially on a real position size, meaning I don't look at the daily chart, when we're doing the morning meeting, I have to do this all the time because we don't know what the intraday looks like yet. When I look at the stock and I'm like, okay, based on the daily chart, the right stop loss is $4 away. But let's find a spot on the 5-minute chart where you can basically be involved in that trade, and then if it closes well, you can look for the daily reward. So what I'm trying to get the point across here is that whereas I'm not going to enter a trade often, and I do this with feelers sometimes, so I got to put a little asterisk behind it, and give it $5 on a daily chart, I will be willing to give back $5 worth of the reward that I've already made in open P&L on the daily chart. That's how I'm able to take daily chart risk. You can't really get daily chart reward if you're not willing to take daily chart risk. But I don't want to take daily chart risk where I can actually take that $5 loss. I want to take daily chart risk where, what's my worst case scenario in Schwab? Assuming that there's no bank run here, which I don't think is going to happen, I eventually give this thing all the way back. I get stopped out at 49.47 and I made money in the trade. That's my worst case scenario. My best case scenario is I get followed through to 56. Then I get a pullback to 54, 53.50, create a higher low on the daily. I break out from that higher low, so I'm creating a trend reversal pattern. I get back to $60 as a resistance, massive resistance level up here. That's my next target. Struggle is up at 60. I don't care. Spends days up in front of 60. Bull flagging, whatever. I don't care. I get back a couple bucks in open P&L. I'm $10 in the money. I don't care. 60 bucks eventually breaks. People eventually realize that Schwab's business is sound and it's worth exactly what it was before SVB blow up, and the stock's at 76 bucks and I'm still in it. You will never be able to catch a move to $76 in Schwab if the next day you're trailing on a 15-minute chart. And I'm not saying I am going to catch a move to $76 on Schwab. It goes back to what I was talking about in a recent meeting. It doesn't have to happen often. It doesn't have to happen often. I think that big money comes from achieving overwhelming reward on the risk that you put on. Overwhelming reward comes from a daily chart. I've had trades where I've risked 15 cents on a 5-minute chart because the daily chart looked good and caught $100 worth of reward. I've had that. It's extremely rare. Extremely rare. But think about it in terms of like a probability perspective. How often do you need to get reward off your risk like that to make up for everything else that potentially fails or is a break-even trade or whatever else? So I don't like your stop management on the trade. I don't think it was worth you swinging it just to trail it that tight. You're referencing my 15-minute rule here, I think, and maybe you're a little bit confused on it. My 15-minute rule is in a very specific circumstance that you almost never want to find yourself in, but this is what I do if I do find myself in it. My 15-minute rule is what I implement for when a stock gaps past my stop loss. So if today my stop loss in Schwab on my swing is 49.48, if today bad news came out overnight, whatever, stock is opening up at $49, let's just say. It's opening up 50 cents below my stop loss. That's a really bad spot to be in. We can't have stops out in stocks overnight, right? You can't do it. You're at the mercy of the news. You're at the mercy of the gap, how the market's gapping. And that's why I have my rule where I generally only like to swing positions when I'm already in the money in it. But my other rule is in the adverse situation where I'm having a stop gap past my out, then I wait 15 minutes to put my stop loss in, which basically means that I have unlimited risk for 15 minutes. The reason why I do that, and it's actually been a very successful rule, is on those really big gaps. Again, let's say that Schwab closed at 52 yesterday. It opens up at 49 today because of bad news. Panic selling happens usually over the course of the first 15 minutes of the day. It could last the first half hour. But usually the weakest hands, the people that are freaking out, the panic sellers, they all dump their stock in the first 15 minutes. I've seen it happen actually like an abnormally large amount of times where I'm in swing positions. Did SoFi just come out with bad news? I see SoFi getting smoked right now. If anybody's got news in SoFi, let me know. I've had it happen in the past, not to lose my train of thought, where this happens to me, and like an unusual amount of times, I don't get out for the first 15 minutes. The low happens in the first 15 minutes. The stock rallies and never looks back. So that's kind of why I have that rule in place. I don't ever want to be selling with panic selling. I don't ever want to be buying with panic buyers as a general rule. I want to be patient in those scenarios as much as I can afford to be. But then whatever the low is after 15 minutes in that situation, then I put my stop at that low. So hope it helps, Rex. Thanks for the question. From Zach, what do you think about morning research for people with small accounts doing more scalping, day trading? I'm still finding what I like and what I feel is important, but it can contradict itself in the short term. As in, what do you think is important pre-market? So I still think, and this was what I was talking about in yesterday's afternoon meeting, I don't care what your time frame is as a trader. I don't care if you're a day trader or a swing trader, or you're like me and you combine both. You start with the big picture. That was the whole key to yesterday, right? How did you know to be buying IWM-related stocks yesterday? Or how did you know you're a pure day trader. How did you know from a day trading perspective to, that you could feel comfortable like coming in and buying Apple like at this like 10-15 low, or Amazon at that 10-15 low, or any of the other tech stocks that we called out longs for at 10-15? Or how did you know that you should be buying financials in the first 5 minutes of yesterday? It's based off the big picture. So I don't care if you're just a day trader. I don't care if you're just a scalper. It's all based on the big picture. You still, even as a day trader, want to trade based on daily charts. Daily charts tell you what direction to trade in. Your 5-minute chart, your 15-minute chart tells you how to execute it. And even if you close out every single position at the end of the day, even if you are, never swinging and you're just scalping, you got to trade in the direction of that daily chart. It's just such a huge, important piece of probability. And even as like a scalper, I still, and look, I go home with stock every night, right? I don't think I've gone home flat now in like, I don't know, 5-7 years, something like that. Like literally, even on vacations, I still have positions open. I haven't gone home flat in at least more than 5 years. But the first 3 years of my career, I never kept a position overnight either. I started as a pure 100% day trader. So I know what that means. And you still want to be trading things based on the daily chart. You still want to take, what a great day trade, Palantir through $8.50 if you're a scalper. But that's still based on the daily chart. That's the daily chart level. So the exact same things are important for someone who's a pure day trader as far as morning research goes, as someone who has a little bit of a larger time frame. To Saint on Mara, initially got long at 10.10. 10.10 at around $9.75. All right, I can't look at a 5-minute chart without knowing the daily chart, even if you're a day trader. All right, Mara giving a beautiful breakaway gap this morning. Oh man, upset I wasn't able to do my research. And I remember seeing actually, and I never got to the point of putting 2 and 2 together, that Bitcoin was having its first day above $30,000 or whatever. If you're doing your research and you see Mara trading above $9 this morning, especially after yesterday's close, you're like, oh man, breakaway gap. Name's got short squeeze capability. I'm pretty confident of that. Like this thing looks fantastic. Big picture long versus $9. And again, a lot of what we're doing is looking at a daily chart pre-market. I don't know what the 5-minute chart looks like, so we start with the daily chart. Big picture, your stop loss has to probably be $9 to trade this thing properly. But then maybe we can find an entry on the smaller time frame to actually be able to execute that bigger time frame. I love this inside 5 and up at 945. If I have a stock that's in play, I don't care that the market is weak. Also, growth stocks generally were strong today. And Nara is probably more of a growth stock than it is a mega cap tech stock, right? So probably a little bit less affected by the Qs. I love this inside 5 and up as a trade, given the breakaway gap, where Bitcoin is, the fact that growth is relatively strong. It's basically trading on news because of what crypto is doing. So I love that as an entry. You're saying that you got in at around 1010 at 975. This is another one where I like this inside 5 as an execution better. I sold a third of my position at 83 cents, and then another third at 93 cents with my stop move to 975. 975, I don't get it. At around 1035, I was stopped out. Okay, I mean, you're getting stopped out no matter what because it broke that pivot low there. There's no way you're not getting stopped out of that unless you're giving all the way down to lows at that point, which I don't like that. Well, all right, I had a couple thought processes. Then, of course, at around 11, it started popping again. What goes through your mind when you enter a position that you get stopped out of? What are the rules you follow when you enter? Okay, so you didn't actually ask me to review your trade itself, just kind of more about the fact that you're upset that it went up like without you, I guess, and you want to know about rules on re-entering. But I do want to actually analyze the trade here because I don't like a few things with your execution. So we got our big picture, right? Big picture is great. So your stock name selection here, I'm loving. You're focused on the right name on the right day, breakaway gap on the daily chart, all that's fantastic. You still want to have an actual trade set up on the small time frame, and maybe you have one that I don't understand or that's outside of my playbook, and then you just didn't explain on the chat here, in which case, fine, or feel free to let me know. This looks like you're buying the stock on the way down. Even though it's uptrending, it's acting well, you're buying it on the way down. The problem with buying it on the way down, you said 1010 AM bar, right? Yeah, 1010 AM bar at $9.75. You're looking for a new higher low. You have no idea where that higher low is going to actually occur. So I always say, as a general rule, you want to buy stocks in the direction in which they're moving, not when they're moving the other direction. Big picture, sure, it's moving up. Small picture, when you execute it, it's price correcting. That price correction could correct, if it's really strong, just the 80 EMA and the 5 minute. It could correct to the space between the 8 and the 21 EMA. It could correct to the 21 EMA. It could pierce the 21 EMA, create a big tail, and then snap back up. That's all assuming that the trade actually continues. It could just fail, right? I'm actually talking about all scenarios where it works. But your pivot could happen in any of those, like 4 different or even 5 different ways where that pivot low creates itself. And then I want to be buying after the potential pivot low has established itself. I have a reason to feel confident that this is the pivot low, and I'm buying it on the way up off of that. My favorite trades for trend continuation on a small time frame are continuation hammers and inside and up. So continuation hammer is when a hammer candlestick comes in with a tail somewhere into the 80 EMA, space between the 80 EMA and 21 EMA, 21 EMA, or even piercing the 21 EMA, and then I get a continuation hammer with a nice little tail there, and I can go long off the low of that tail. It's showing me that buyers took control from sellers on that very small time frame, and I've got the other layers of probability that the stock is trending higher, and the daily chart's in my side, and everything else. Awesome. Or this case, inside and up. It's another way in which a pivot low can regularly be formed. So if this was my trade, again, I would not be buying this on the way down. If you're buying it on the way down, the only appropriate stop loss is the low of the day, in my opinion. You don't know that $9 and what's the low? $9.67 can be your stop loss until probably another 10 minutes after you entered the position. You don't know that this is creating this potential pivot. So since you're buying on the way down, your only point of reference is the low of the day. I don't like that risk reward nearly as much as waiting for the signal. Sometimes you wait for the signal doesn't really ever appropriately come, and then you just miss the trade. I'm fine with that, no problem. I can't be involved in a remove in the market. It's not possible. But this actually then gives you the inside 5 and up, which is one of my favorite 2 trend continuation patterns. So you buy the break of the inside 5, your stop then becomes the low of the pivot. It works in your favor. You get your risk covered. There is nowhere within this chart that says you can trail. There's no, at least not based on my trailing rules. I've got 3 specific trailing rules. You can reference them in my game planning class. But I don't understand the increasing on the stop to $9.75. There's nothing in the chart here that I see, even on a time frame as small as 5 minutes, that justifies a $9.75 stop. The only important spot to the stock is this low, which is $9.68, so I got my stop at $9.67. I'm still getting stopped out, though, so we can still answer your question. No matter what, I'm getting stopped out of this. For me, this would be a break-even trade. Fine. You know, a 15-minute chart pullback was just too deep. The 5-minute chart pivot was just not enough to be able to hold, so I don't catch the rest of the move. So with that feedback provided, I can actually kind of answer your questions. What are my rules when I want to re-enter a position that I got stopped out of? My rule is that I can only re-enter a position that I got stopped out of if there's a new trade set up. So again, what are trade set up? So there's 2 here, the inside 5 and up and the inside 5 and up. So I need one of the 2 things I just discussed. And probably on a 15-minute chart because it's becoming later in the day. I need an inside and up, or I need a continuation hammer. Then I have a new trade setup and I can get in. I think that a big mistake, and it's a mistake that I have certainly made, is seeing that you got stopped out of a stock, seeing it begin to uptick, and then you're immediately buying the stock again. For every time the stock gives continuation when that happens, there's going to be 5 other times where you're just compounding losses. You rebuy the stock, you're annoyed you got stopped out. Oh, I was right, it's going up. Rebuy the stock, get stopped out at a new low. You see it uptick again. I've done this. See it uptick again, rebuy the stock, put your stop loss at the new low, get stopped out again, upticks again, you rebuy the stock, put your stop loss at the new low, you get stopped out again. Next thing you know, you churn the heck out of your account so much that you would have been better off just having the stop loss at the low of the day, pivot point to begin with, basically, or giving it that more room even to begin with from a risk perspective. So I will only re-enter a position if an actual new trade setup comes in. Otherwise, I have my trade. The stock stopped me out of that trade. My trade was my trade for a reason. Assuming that my stop losses were in the appropriate spot, which I would argue that yours were not, then I have no need to come back and fight that stock. And guess what? If it continues to go up and I got stopped out at the low, I don't care. I don't care. I don't care if trades work without me. If I had a rule set that I followed and it pushed me out based on my rule set, I don't care. It doesn't matter. So, but it's definitely worth it to do a reassessment to make sure that your stop was in the right spot. So, appreciate the question. All right, guys. So, good questions there. It's almost 5 o'clock. Let's wrap things up. So have a great night, everybody. CPI tomorrow. So, like Pat said, get a good night's sleep, and we'll see you all then.